Our business model has basically relied on cheap labor from China, presumably cheap energy from Russia, and partially outsourcing security and security investment. These days are gone.
She's not wrong, and she might still be putting it a bit too lightly. Back in 2002, the GDP gap between the EU and the US was just 17%. Fast forward to today, and that gap has widened to 30%. And when you consider that the EU's population is significantly larger than that of the US, the situation looks even more concerning. If we look at labor productivity from 1890 to 2022, Europe made impressive progress after World War II, nearly catching up with the US by the end of the 20th century. But since then, productivity has slipped, back to around 80% of US levels. Former Italian Prime Minister and ex-president of the European Central Bank, Mario Draghi, warned EU leaders almost 6 months ago that without tough decisions, Europe risks a slow and agonizing death. In his Draghi report, which examined the failing European economy and how to fix it, his message was clear: act now or face serious consequences. So, what's happened since? Well, the European Commission has released yet another document, a Competitiveness Compass for the EU. Here at EU Made Simple, we were hoping for concrete actions instead of more paperwork. But for now, we will break down what this new plan is all about and what we can realistically expect to see next. Let's get into it.
The Competitiveness Compass focuses on 3 pillars. The first one is closing the innovation gap. The second is a joint roadmap for decarbonization and competitiveness. And the third one is reducing our dependencies and increasing our resilience and our economic security.
So, these are the 3 pillars of the plan, further divided into 47 flagship actions aimed at boosting competitiveness and resilience across the EU. The plan claims that it could unlock an additional 470 billion euros for European companies and save them 37.5 billion euros annually through simpler regulations. Let's start with the first pillar, the innovation gap. Europe has struggled to fully capitalize on the first digital revolution led by the internet. For example, no EU company founded in the last 50 years has reached a market value of 100 billion euros. Meanwhile, all 6 US companies worth over 1 trillion euros were created in that same time frame.
Since 2008, close to 30% of the so-called unicorns, namely companies that will go to be valued more than 1 billion euros, unicorns that had started in the European Union have left, and the majority of them went to the United States. And this has to change.
The reality is that innovative digital companies in Europe are struggling to scale and secure funding, especially compared to the US. The share of global venture capital funds raised in the EU is only 5%, compared to 52% in the US and 40% in China. Bridging this funding gap is crucial. The European Commission has identified 13 flagship actions to address just this. For instance, the European Research Area Act to boost R&D investment to 3% of GDP. The EU wants to emulate the DARPA model, a US approach that funds breakthrough technologies through high-risk, high-reward investments, leading to innovations like the internet and GPS. Then there's the 28th legal regime, which would eliminate the need for innovative companies to navigate 27 different legal systems. Instead, the 28th regime would introduce a single harmonized set of EU-wide rules for corporate, insolvency, labor, and tax law, making it easier and cheaper for these companies to operate across the single market. The second pillar is a joint roadmap for decarbonization and competitiveness.
Decarbonization will be an opportunity for growth. But if we fail to coordinate, there is a risk that decarbonization could run contrary to competitiveness and growth.
To address this, the EU has outlined 15 flagship actions aimed at keeping Europe competitive while transforming into a decarbonized economy by 2050, with an intermediate target of 90% by 2040.
I want to be very clear. The European Union stays on course for the Green Deal objectives, without any question.
A key part of the plan is the Clean Industrial Deal, a strategy aimed at reducing energy prices, securing raw materials, and boosting demand for low-carbon products. However, its financing seems a little less stable, relying on a €100 billion fund that mostly draws from existing or already allocated funds and hinges on voluntary contributions from governments. Another crucial element is the Affordable Energy Action Plan. Europe currently depends on fossil fuel imports for nearly 2/3 of its energy needs, and Russia's manipulation of this reliance during the war against Ukraine has been a major factor behind the recent energy price spikes. To tackle this, the plan aims to reduce dependence on imported fossil fuels and secure more affordable energy sources for the EU. There's also a European grids package to modernize and expand the EU's energy network and infrastructure. The report also highlights the need to establish a single market for waste to boost recycling efforts across Europe. The circular economy potential of the European remanufacturing market is expected to grow significantly, from €31 billion today to €100 billion by 2030, potentially creating 500,000 new jobs in the process. The third pillar focuses on reducing excessive dependencies and increasing security. Europe's vulnerability stems from its heavy reliance on critical raw materials and advanced technologies, with 40% of imports coming from a limited number of suppliers, half of which do not align with EU interests. To tackle these challenges, the EU has outlined 10 flagship actions. And one that caught our attention is the white paper on the future of European defense. Yet another document for us to dissect. We can't wait. More interestingly, the EU plans to diversify its trade partnerships by expanding its network of trade agreements, which currently covers 76 countries. This includes pushing forward deals like the EU-Mercosur Agreement and modernizing the EU-Mexico Global Agreement. For example, removing high Mercosur tariffs could save EU exporters over €4 billion in custom duties per year. On the defense side, the plan encourages greater cooperation between member states through joint procurement, joint R&D, and pooling resources to enhance security and reduce dependencies. Geopolitical tensions, such as the Russia-Ukraine war, have also prompted Europe to ramp up defense spending due to rising threats from conventional and hybrid warfare. To make all three of these pillars possible, the EU has also introduced what they call enablers of competitiveness, with an additional 9 flagship actions designed to support and enforce these pillars. The Commission plans to simplify rules, cut red tape, and speed up the administrative processes to make Europe more attractive for investment, with a target of reducing the administrative burden by 20% for all companies and 35% for SMEs. There's talks of creating various unions, a savings and investments union, a data union, a energy union, skills union, and even a defense union, all aimed at improving coordination at the EU level, establishing common rules, and simplifying investment processes.
This was a glimpse at the width and the depth of the Competitiveness Compass. I want to be very clear. We have a plan, we have a roadmap, we have the political will. Now what matters, and really matters, is speed and unity.
As for the plan, this is what the current timeline looks like for these various acts and proposals. We've only scratched the surface, but to be honest, it's still quite light on detail and a little vague. As more details emerge, we may dive deeper into each initiative with separate videos. Here's what I think. I'm not sure the plan adequately addresses the Draghi report from 6 months ago. First, Draghi estimated that Europe's transition to competitiveness would cost around 750 to 800 billion euros annually, about 5% of the EU's GDP in 2023, which is far higher than the 1 to 2% spent under the Marshall Plan. The Commission's plan, however, acknowledges this, but does not present a concrete plan on how to finance all of this. Second, the Draghi report highlights that the EU itself needs to evolve by refocusing, accelerating, and simplifying.
We could do much more if all these things were done as if we acted as a community. But we lack focus on key priorities. We don't combine our resources to generate scale. And we do not coordinate the policies that matter.
One of the most interesting ideas in the Draghi report was to extend qualified majority voting in the Council to avoid delays caused by the need for unanimous decisions. If things get stuck, Draghi suggests using the treaty mechanisms to let like-minded member states move forward. Yet the Commission report doesn't address this at all. In my view, this is still the biggest obstacle facing the Union today. Without faster decision-making, all of these plans risk being too little, too late. If you enjoyed the content, don't forget to like the video and leave a comment. And if you're interested in learning more about what the EU can do for its defense, be sure to check out our video on a European army, linked right here. And to support us further, consider joining us on Patreon. Every contribution helps us bring you more in-depth discussions on Europe's future. Thank you to our presidents, Jan, Sjouke, Christian, Peter, HVD, BJ, and Unite Europe. See you in the next video.